Hello everyone, good morning. Two topics which were left for part two, that was regarding the distribution of S Corporation and distribution of C Corporation. Partnership distribution we have already done in the previous session. So let's start with it. Let me share my screen. Okay, so first of all, I'm going to explain the distribution in case of S Corporation. Okay, so if an organization is a S Corp and if it's a C Corp, there is a main differences. Here, the shareholder will get the pass-through status, and here the C Corp will itself pay the tax at flat 21%. Okay, now in case of S Corp, if there is a distributions, what will happen? There is a sequence which we need to follow. First of all, the distribution should be up to your AAA, that is accumulated adjustment account. After that, we will see that whether there is any accumulated earnings and profit. This will come in picture only if the corporation earlier was a C Corp and then converted to S Corp. So whatever was the profit in the C Corp, which is getting like the retained earnings, which is getting carried forward each year, will get transferred to S Corp and it will be named as accumulated ENP. Okay, understood. So this is accumulated adjustment account, nothing but our current year earnings. This is our accumulated earnings and profit from our C Corporation. Okay, after that we will also check that if these two amounts are zeroed out, means as soon as you do a distribution, as soon as you distribute certain amount to the shareholders, you are going to first reduce your AAA. Still there is something which is going negative, you will again distribute from accumulated ENP, and then you will touch the OAA, other adjustment account. Okay, now I'll explain you what is the meaning of AAA and OA, what is the difference between these two. And here comes one more thing, that is previously taxed earnings and profit. Okay, so this thing actually comes mainly in the C Corporation, but right now for S Corporation, you just need to understand that AAA, what is AAA and what is OA. Okay, in case of S Corp, we know that the items are bifurcated into two things. One is separately stated and one is not separately stated. Okay, so separately stated means those are part of Schedule K. Okay, directly they'll go on the Schedule K. Non-separately means those are going to be recorded on the page 1. Okay, income and expenses. So that is our separately stated. Schedule K is a non-separately stated. Right, so S Corporation maintains two types of records for each shareholder. Each shareholder will have accumulated adjustment account and a OAA account. Now what are actually this mean by, we'll read one by one each and every bullet points and I'll explain you in detail. Okay, so this records together with the shareholders basis in his or her stock and any subchapter C ENP, that is nothing but our accumulated ENP. Okay, so in the corporation are used to determine the shareholders tax treatment of distribution. So as soon as the distributions are done, first of all you will deduct the AAA, second you will give a chance to accumulated ENP, and lastly if there is something missing, like still more distributions are done, you will check the OAA account and reduce it. Okay, still you have distributed more than OAA account, all these three accounts are getting zeroed out, still there is some extra distribution, you will look at the stock basis. Okay, and we know that up to the basis it is a return on capital, we are not going to tax it at all, but above this whatever distributions are being made, this will be capital gain for the shareholder. Clear guys, this much? This the flow should be clear in your head when you solve the sums. Even if in EA exams or in CPA exams, these questions are most important. This type of sums they are going to ask in the exam paper. Okay, so remember, first you need to understand what is the difference between AAA and OAA account. Okay, so AAA and OA records and informations are needed by the S Corp only for the purpose of helping the shareholder to determine the taxability of distribution. Right now, what AAA represents? Current accumulated balance of all separately and non-separately. Okay, means, can I say, if I talk about AAA, this will contain our page 1 incomes. This will also contain our schedule K incomes. Okay, separately plus non-separately stated items will be added over here in AAA. Got it, guys? So AAA adjustment parallel those made to the basis for separately and non-separately stated items. It is calculated without regard to any negative adjustment, excess loss on deduction over income and gain. It doesn't matter whether it's going negative or not, but triple is not affected by any transactions related to when it was a C corporation. Let's say in previous year it was a C corp. Now current year it is becoming a S corp. Anything, any distributions which are related to the C corp will not be reduced from the AAA, but it will be reduced from accumulated ENP. Remember this thing very well. Okay, so if your AAA balance is positive, you can reduce from this the distributions only which pertains to the S corp. Anything, any item which pertains to the C corp, like previously it was a C corp, due to this there was some separately stated item, non-separately stated items, this will not be considered in AAA. Okay, so expenditures that are non-deductible by S Corp will decrease the stock basis in AAA. So can I say, let me reframe the formula of AAA. AAA is nothing but all your separately stated items. Okay, so this can be income and expense both, interest income, separately stated income. Okay, charitable contribution, it's a separately stated expense. So separately plus non-separately stated items. Okay, this will also be including, the AAA will also include any of the non-deductible expenses. Non-deductible expenses. It will reduce the basis in the stock, and also AAA will get reduced. Okay, understand this thing properly. For example, charitable contribution will pass through to the shareholder and reduce the stock basis. So the reduction in the basis is equals to adjusted basis of contributed property rather than the FMB. Okay, so in this case, what, let's say the non-cash property has been distributed. So what you will do, straight away take the adjusted basis of that property, that will be considered as your schedule K item. And since it's a non-deductible on your page 1, I can also call it as a separately stated or a non-deductible expense for the C corp. I will reduce it from my AAA and also my stock basis. Okay, the basis part we have already done. How the basis will be calculated, take all the contribution, take all the incomes, add all the separately stated incomes, reduce expenses, reduce non-deductible expenses, and reduce any distributions. So that thing is already done. So here also we are going to reduce the non-deductible expenses. Okay, so adjustment is not made to AAA for tax exempt income. Here I have not mentioned here the incomes, only separately stated items, non-separately stated items, income, expense which are non-deductible, but I cannot adjust the tax exempt income over here. I cannot add the tax exempt income. What is the example? Municipal bond interest. Okay, I'm not going to add the tax exempt income over here. Only non-deductible expense is going to be added over here. Okay, so or non-deductible expense related thereto will reduce the basis. Related thereto means which is related to the tax exempt income. Right, but where this adjustment will be made, this will go to OAA account. Now what is OAA account? Actually, any adjustment which you are going to make for a tax exempt income, any life insurance proceeds, okay, these are non-taxable, and any expense which are incurred to earn this exempt income. So can I say OA is simply means your tax exempt income, right, minus all your expenses which are incurred to earn this tax exempt. Got it, guys? So AAA simply, now you got the difference between AAA and OAA. Accumulated ENP, I have already explained. This is nothing but any retained earning which is getting carried forward from the C Corp. See, if C Corp is getting converted to S Corp, what they will do for the retained earnings will get carried forward each year. Okay, it's a going concern. So that's why we are going to carry it forward to next year. So even if a C Corp is converted to S Corp, all the retained earning will get transferred to S Corp, and that retained earning will be called as accumulated ENP. Okay, so you will have an opening balance for AAA account, you will have opening balance for accumulated ENP. OA is a rare, like in practical life, you will not see that much OA balance, okay, other adjustment account balance. AAA is simple, like take the all separately stated incomes, non-separately stated incomes, reduce non-deductible expense. Only one thing, non-deductible expense are getting reduced, but income will be included. Tax exempt income will be included in OAA account. Clear, guys? Few people, like those who work in practical life also, they rarely knows the difference between OAA and AAA. So when the distribution comes into picture, they are confused. Like we people used to get confused, like from which we need to reduce the balance, whether it's from AAA or OAA. Okay, so AAA balance can be reduced below zero, but basis may not. What it's saying is this AAA balance can go in a negative, but the basis of a shareholder cannot go in a negative. The stock basis, why? Because they will have to pay the capital gain tax, right? So distributions do not reduce the AAA to zero. Normally this all items can reduce the AAA to zero. Okay, that is a common thing. But if there is a distributions, let's say AAA balance is 10,000. After reducing all these items, this out of this, there is a distribution of 5,000. So this will be reduced. AAA balance will be reduced to 5,000 as a closing balance. Okay, now let's say there is a distribution of 12,000. AAA balance will become zero. Just because of distribution, you cannot make this negative, but because of other items, separately stated incomes, expenses, non-deductible expenses, due to this, if it is going negative, we will carry it forward as it is. This is the main difference, like which we used to get confused in the practical life, right? This AAA balance can go in negative if it is due to the other items, that is separately stated incomes, expenses, non-separately stated incomes, expenses, non-deductible expenses. Due to this, it can get in a negative, yes. But if it's a positive and you made an excess distribution, this cannot go below zero. But this will be shown as a zero only. Any excess distribution will then be adjusted with the next head, that is accumulated ENP, and then still it is falling short, we will check the OA. Still this is falling short, we will check the stock basis. Any excess of the basis will be charged to capital gain. Clear, guys? I hope the difference is clear for you. Now subchapter C, earnings and profit. Okay, this is nothing but a S Corp does not have a ENP unless it was formerly a C Corp or acquired ENP in a tax-free reorganization. Reorganization means, let's say two companies are getting merged, or one company is acquiring another company. One is C Corp, another is S Corp. Okay, so any accumulated earnings will get transferred to the S Corporation. Okay, so subchapter C, ENP are not adjusted for S Corp items of income. That is the reason why accumulated ENP will not have any additions. It will have only deletions. Okay, it will have only subtractions. It will not have any additions. Anything pertains to S Corp will adjusted in AAA. Anything pertains to C Corp. Okay, let's say previously due to some reason you got some income when the C Corp was formed. Due to that, in current year, when you're a S Corp, you receive some income or there is an expense related to it, it will get reduced from the accumulated ENP. Anything related to C Corp will be, reduced or added from accumulated income. Okay, now let's see if what happens if there is a distribution of property. I hope you guys are clear with the query. Clear with the difference between AAA and OA. If you have any queries, question, please write it in the comment box, or still if you're confused with any of the bullet points, you can just let me know. Second thing is, this batch is right now going for 2022 tax law. Okay, for 2023 tax law, we are going to start it post 15th Feb with the updated material. Okay, so if you guys are still looking forward to start your journey in EA course, you can easily complete one part starting from 15th Feb till 15th of April. Okay, and just after April, you have 1 month to revise the whole course. In the June window, you can appear for the one of the paper. Okay, so we have planned in that manner only. As soon as the window opens, you should not start studying at that time. You should complete your studies till May, okay, till April. And then during the whole May, you can give your time in the self-study. We'll give you the, personalized plan depending on your time availability. Okay, few people are solely working, or few people are solely in the education field, so they have more hours. Few people have less hours, they can give 2 hours or 3 hours of study. So based on your requirement, we'll give you the study. Okay, so coming back to the point of distributions, in case of distribution, in case of distributions, there is a AAA and OA difference is clear. Now let's see how the distribution will occur in case of distribution of property by the S Corp to the shareholder. Okay, two scenario will be there over here. If the S Corp is distributing the property and the FMV of that property is more than the basis. Okay, I'll take just simply one example, that is building, land or building. The land and building is appreciated property. It will always keep on appreciating, and the fair market value of that land and building will obviously be higher than what the S Corp might have purchased earlier. Let's say the basis was just 10,000. Now after 15 years, the fair market value of that land has came to $1 lakh. Okay, so what will happen? This is an appreciated property. The amount and character of the gain and its treatment are determined as if distributed property was sold to the shareholder. So write it down somewhere, or you can just prepare a chart for understanding. If first scenario is, if FMV is more than the basis, it will be considered as a sales of asset by S Corp to shareholder. Got it, guys? So it will result in a ordinary income if the person is having more than 50% of shareholding in the organization. Here comes a related party transaction. We have done that topic in the basis of property chapter. So in case of a related party transaction, same is the scenario. If you're holding more than 50%, like if you're related to the other person who is selling you the property, the loss will disallowed, but the profit, if any, will be recognized as an ordinary income. Same scenario is there over here. If the shareholder is holding more than 50%, they will recognize it as an ordinary income. Okay, the difference between the FMV and the basis will be considered as an ordinary income. Got it? The gain is passed through pro rata to each shareholder. First step is at a S Corporation level, you will see that, let's say the FMV was 1 lakh, basis was 10,000 in our example. So due to this sales, see, this is not a sales, the S Corp is just distributing the property to the shareholder. Okay, so as soon as you're distributing the property to the shareholder, is the shareholder going to give you something in return? No, it's just a normal distribution. But for S Corporation, it will be considered as a sales. So take a difference between FMV and a basis, that is 90,000 is the profit, or I can say gain, which is realized. This 90,000 gain realized will be first allocated to all the shareholders in the S Corporation. Okay. And due to this distribution, due to this allocation, shareholders basis in his or her stock and AAA is increased by his or her share as if S Corp has sold the property. Since this is a gain, this will increase the basis. So your AAA balance will also increase and your stock basis will also increase. No effect is going to be done on OA account or accumulated ENP. Okay, only stock basis you are going to increase and AAA balance will increase. Got it, guys? So the distributive shareholder must determine the proper treatment of the distribution. Distributive shareholder means who is going to receive it. Okay, distributor means who is going to give the property. Distributive means who is going to receive. The shareholder is going to receive it, will have to determine the proper treatment. Let's read one example and understand it. S Corporation sells an investment asset with a basis of 15,000. Okay, for 23,000. So now here the corporation is not distributing it. It is actually selling it to the shareholder. Can I say the shareholder is a related party? So you will recognize this, difference of 8,000 as a gain. Okay. Now this gain is a ordinary income, and that is why it will go on schedule K1 as a ordinary income as a flow through to each and every shareholder. So what the shareholder, what the corporation has done, has recorded 8,000, and the portion of that, let's say there are two shareholders only, 50-50% shareholding is there. So the shareholder will be liable for a $4,000 of tax. Okay, means gain will be taxable for one shareholder 4,000, other for 4,000. Clear, guys? I hope this much is done. Next is when the lost property means if it's a depreciated property. One example I'll give you is a car. Okay, here it's appreciated means if the FMV is more than the basis. Here, if it's a depreciated means my basis is less than the FMV. Okay, let's say I purchased a car for $10,000, but now after 1 year, after 2 years, the FMV will not be same. The car is a depreciable asset and it will reduce the FMV of that asset will obviously be less than the 10,000. The very next day it start on depreciating. Okay, let's say after 5 years, like after 2 years, the value is now $5,000. Okay, so what will happen? No loss will be recognized by the S Corporation. Same concept is there in case of related party transaction, right? Ordinary income. In case of related party transaction, here it's a loss. So the seller means the S Corporation who is giving up this depreciated property will not have any loss recognition. Okay, but this loss is passed through to the shareholder and is non-deductible. It will be passed through to the shareholder, and it is called, this kind of loss is called as non-deductible loss. Now what will happen? Like for shareholder, this non-deductible loss will be mentioned in which head, or it will be reduced from what? So they will be reducing the basis in his or her stock in the S Corporation and take the FMB basis in the property distributed. Simply remember, let's say a car was valuing 10,000, but when you sold it, it was valued at 5,000. So can I say there is a loss of 5,000 to the S Corporation? They will not do anything, but this is allocated to the S Corp shareholder in the form of non-deductible loss. Okay, so non-deductible expense, non-deductible loss, I can say. Now the person who is actually receiving the car, for him, what will be the value? The value of that car will be simply 5,000. I'm not going to take the adjusted basis of the car. Here, what we were doing is that the person who is going to actually receive this property, they will record it at FMV. Here, the person who is receiving the property, they will record it at the FMV, that is 5,000. Okay, just a minute, guys. Okay, so now here in case of car, you got the point. Okay, now each shareholder must reduce the basis in his or her stock. You are going to simply reduce the stock basis. The distributive shareholder must determine the proper treatment of the distribution. He is going to determine what is the proper treatment. The S Corp is not liable for anything. Now this vehicle is now further sold to a non-related party. Instead of distribution results in the pass-through loss. So what will happen? This 5,000 loss will now be allowed. Initially, this loss was not allowed. Now it will be allowed. Let's see one example, what it is mentioning. The S Corp has a capital asset with a basis of 7,000. Okay, what was the basis? 7,000. FMV is 5,000. So can I say FMV is less than the basis? So this is a depreciated property. First, you need to identify that. Which it distributes to the sole shareholder. Only one shareholder is there. The corporation will have a non-deductible loss of 2,000. So what the shareholder will do? He will reduce his basis. He will not touch his any ordinary income which is taxable in his 1040 return. Only and only the basis will get reduced. Okay, so the shareholder reduced the basis by 7,000 and has a 5,000 basis in asset. Okay, now if the corporation sold the asset and distribute the proceeds, the shareholder would have a 2,000 deductible loss. Here the corporation is not selling it. The shareholder is not paying any money. Okay, shareholder is just receiving a distribution. So whatever was the basis of the asset, this will be reduced, and this FMV will be the value of that vehicle for that shareholder. Okay, S Corporation is not required to recognize gain on liquidating distribution of certain installment obligation. This means what? If there is a liquidating, see, this is a non-liquidating distribution, means the partnership is still in the S Corporation is still into the continuation. If there is a liquidating distribution of certain installment obligation, the shareholder treat each payment as a pass-through item for the S Corporation. Okay, so you are not going to make it taxable, but each payment considered as a pass-through item from the S Corporation. Each payment from S Corporation will be considered as paid by the shareholder, pass-through. Okay, next is what is the shareholder treatment. This we have seen from the point of view of corporation. Okay, now what about the shareholders? Now what the shareholder will do? Shareholder treatment of distribution from the S Corp is determined at the end of the S Corp's tax year. Whether it needs to be distributed from AAA, OAA, basis in the shareholder stock and the basis in the corporate shareholder debt must be adjusted for the S Corp's item of income, deductions, etc. for the entire tax year before determining the proper treatment by the shareholder for the distribution. So for whole year, at the end of the tax year, you need to first determine whether you are going to reduce AAA or OA, accumulated ENP. Okay, what is the nature of transaction? That will define from what you are going to reduce or add the items. Okay, now some S Corporation will have no ENP. With no ENP, shareholder treatment of distribution is straightforward when S Corp has no subchapter ENP. It's very simple. The portion of distribution that does not exceed the basis in the shareholder stock in the S Corp is treated as a tax-free return of capital. Up to the amount of basis you need to consider is a return of capital. Over and above this basis, whatever is going is your gain or sales, or gain on the sales of stock. Okay, so the character depends on the nature of stock in the hands of shareholder or his or her holding period. Means whether it's a long term capital gain or short term, it will depend on from what date you were holding the stock in that S Corporation. You are holding the ownership in that S Corporation. Okay, now if there is a subchapter C ENP, means there is this accumulated ENP. This is about no ENP. This is about, yes, we have a ENP. The distribution is first treated as a return on capital to the extent shareholders AAA balance. Okay, so just Understand the difference, guys. I'm going very slow on this point. If there is no ENP, we have this table AAA, accumulated ENP, OA, and then the basis will get reduced. If there is no ENP, start from here. First, reduce the basis. Clear, guys? I hope this much is clear. If there is an ENP, okay, your first step will start with AAA balance. Okay, so this will get reduced, but maximum up to what? AAA balance. Okay, sorry, I said it reverse, man. Wait. This will get reduced, but it is limited to maximum your basis amount. Okay, see, if the shareholder is having a subchapter C, ENP, the distribution is first treated as a return on capital, tax-free to the extent of shareholders AAA. Up to this AAA balance, it will be considered, it will reduce the basis, and up to this basis amount, up to this two amounts will be non-taxable because it is a return on capital. Now, more than this, there is still some distributions which you have made. So excess distribution beyond AAA's dividend income to the extent of more than this, then if there is a balance, see, as we are looking at, there is a balance. So up to the balance of ENP, it will be treated as a dividend taxable income. Clear? Any excess distribution and you have OAA balance, then up to OAA balance, it will be considered as again the return of capital. Okay, still there is something remaining, then you will consider it as a capital gain. Okay, again I'm going very slow in explaining this part because this is most important. If you understand it very well, every sum, every MCQ, any simulation, anything will be very easy for you to understand. See, AAA balance, I'm talking about just a B part. Okay, first accumulated ENP, we have OAA balance, and then we have the basis. Okay, so let's take an example. We have a OAA balance of, accumulated ENP balance of $1,000. Okay, the basis of stock was 10,000 and accumulated ENP was having a balance of 5,000 and OAA is having a balance of let's say 3,000. Okay. Now, if the subchapter C, ENP, the distribution is first treated as return on capital. Let's assume the distribution is 4,000. Okay, to the extent of shareholders AAA. Can I say 4,000 is within this balance? So 4,000 will reduced here and 4,000 will be reduced here also. So your AAA balance will become 1,000. Your shareholders basis will reduce to 6,000. Rest all will remain as it is. Okay, we'll take 3-4 scenarios to make it simple. Clear, guys? This much is clear, I hope. Now, let's assume your distributions. We have, in first scenario, we have taken a simple distribution of 4,000 that was within AAA. Now your distributions are, assuming your distributions are 7,000. I can't straight away reduce 7,000 from this because this is limited to my AAA balance. So whole AAA balance, as I mentioned in earlier stage, AAA can't go in a negative due to your distributions, right? So distributions are only limited to the AAA balance. $0 will be my AAA balance. This 5,000 will reduce the basis. Okay, so 5,000 is my remaining balance. What about the remaining 2,000? In this example, we had a distribution of 7,000. Okay, understand the example first properly. Out of 7,000, I can just reduce 5,000 from AAA, and the same will be reduced from my basis. Okay, now what about the remaining 2,000? I'll check. Do I have a ENP? Yes. So this ENP, I'm having only 1,000 balance. So this 1,000 will be reduced over here. This will be your taxable dividend. This is a return on capital. Okay, now out of this 2,000, 1,000 is a taxable dividend. What about the remaining 1,000? It will reduce my OAA balance. Okay, now any excess distribution beyond ENP, means this 1,000, is a return on capital to the extent of OAA. Okay, so I'll reduce this OAA over here, and this is again called as return on capital. My new basis will be $4,000. My OAA balance is 2,000, and this 2 will be 0. I hope this example is clear and crystal to you guys. If you still have any doubts, you can just mention it in the chat box or in the comment section. Okay, this example is the best example to understand the allocation of AAA, accumulated ENP, OAA, and how much will be allocated to the basis. Anything which is getting reduced from OAA and AAA, that is your basis reduction. Anything which is allocated to accumulated ENP will be your taxable dividend. You need to follow the same sequence. Go first for accumulated adjustment, second for ENP, and third for OAA. No other sequence needs to be followed. Once you have a zero balance over here, then start with the accumulated ENP. Once you have a zero balance over here, then go for OAA. Clear, guys? I hope this much is clear. Next is any excess distribution over the remaining basis is treated as a gain from sales of stock. Okay, still let's say our OA has become zeroed out. Let's say in the same example, this distributions instead of 7,000, let's say this distributions are 10,000. So what will happen? 5,000 will allocate to here. Then 1,000 will be allocated to here. So remaining is 4,000. I can't reduce this. I can't make it as a negative. Instead of 4,000, I can reduce only 3,000. So what about the extra 1,000? This will be chargeable to capital gain. Okay, means first I need to check whether there is any return of capital remaining or not. Okay, see, from 10,000 we reduce the $5,000, this one. Then again we reduce the $3,000, this one. So what is the remaining? $2,000. So these two are return on capital, and the extra 1,000 which was remaining due to OA limit, we didn't reduce that 1,000, will again be called as a return on capital. So remaining 1,000, this will be your new basis, and your return on capital, means non-taxable, will be 9,000. Clear, guys? I hope this much is done. The whole summary is given over here, but I would prefer you guys to pause the video, write down the example, take 3 scenarios. In first example, the distributions were 4,000. Second scenario, distributions were 7,000. And third scenario, the distributions are 10,000. Write all the 3 scenarios and solve the sum in your book. So before going to exam, only this summary will be helpful. Clear, guys? So distributions in case of S Corporation we have completed today. Tomorrow again I'll upload one more video, that is distributions in case of C Corporation. Okay, that is also an important topic. So make sure to go through it, and I will be uploading the MCQs on our Google Classroom. So please do solve the MCQs from study unit number 17. Okay, and those who are planning to enroll for the new batch, upcoming batch, do connect with me. Here is my number, 597. You can just WhatsApp me or send me a hi for the course detail. If I don't pick up the call, don't worry, just send WhatsApp hi on this number and which part you want to enroll and what details you need. Okay, so thank you, guys, and wish you good luck if you're appearing in the few days. So have a good day and good luck for your exams. Thank you.